I love doing these sessions. I love talking about financial wellness because I understand just how big of an impact it can have, not in your like long-term retirement, which obviously it does, but just in your day-to-day living. People are so stressed about finances in general. All the studies show it. And this financial stress bleeds into other areas of our life. It affects our interpersonal relationships. It impacts, our free time. It impacts our general health. There's so many things that go into it. And so I love leading these sessions. Today, we're talking about credit made clear. This is brought to you by Corporate America Family Credit Union, or CAFCU, as I'm going to say throughout all of this. We really believe that financial education should feel like a conversation, not a lecture. These are things that we are all going through that impact all of us. There is no one who is alone in this. No one is a martyr. We're really trying to break down this stigma of just everyone can use assistance sometimes. We are here to provide it today. Um, I just want to say thank you to Jeanette, who's in our chat. Jeanette was one of my previous coworkers. So good to see her in here. I was supposed to text her back months ago. Totally forgot about that, Jeanette. My bad. Anyway, so my name is Will, the person who forgets to text people back. I am a certified credit union financial counselor. I've been giving presentations for coming up on 10 years now. I've spoken to thousands of employees. We've done hundreds of sessions. I love doing this stuff. And I am joined today by Amanda Rowan from our lending department. Amanda, if you want to unmute yourself, say hey, make sure your audio is working.
Hello, I hope you can all hear me. Thank you for having me. I've been with CAFCU I just hit my 9-year anniversary. Started off in our member solutions department, helping those folks that needed some assistance with their payment. And then I have been in the consumer lending department, specializing in credit for the past 7 years or so. So very excited to talk a little bit more about credit and reports and answer those questions that you might have.
Yes, perfect. Thank you. And so we're going to be hearing from Amanda later on with a few different sections. And so again, over the session, we're going to help you understand what credit actually is, how scores are built, what's in your report, and just what's going on with all of these apps and all the different advice that we see. The goal is you're going to leave knowing exactly what to focus on and what to ignore. There's so much information out there. Everybody makes it seem like everything is on fire all the time. We're going to give you some clear guideposts, things to focus on to help bring you to where you want to be with your credit, with your financial goals. Because when you understand credit, you gain more control over your financial future. You create more options for yourself. And so I wanted to start this off. Again, I said no one's in this alone. No one needs to be a martyr for this. So I wanted to just break down some common myths versus like real conversations about this. So checking your own credit score hurts it is a myth. When you're checking your score, it's only hard inquiries from lenders that are going to impact your score. So if you're looking on different apps like Credit Karma, like some of the bureau's apps, they are doing what's called a soft pull. It doesn't impact your score. And this is just sort of a pre-evaluation. Now, when you're doing those hard inquiries, this is when you are on the line applying for different credit, applying for those funds for home, for your car, for just your personal life, whatever that may be. That's a hard inquiry. That's when your score is hit. If you are just generally checking it out, you should be free from that. Next one we're getting into. I really like this one. The myth is that you need debt to build credit. Maybe you've heard this before. I used to say it as you need credit to have credit. There's a different way to frame this, and I think it puts control back in your hands, and that is uh, you need credit activity, not debt. And there is a big difference in that. So, whatever credit you are applying for, whatever you are making happen in your regular life, it's just having a plan for how you're going to pay that credit. We don't need to just enter, ridiculous amounts of debt to say, okay, now I'm working on my credit score. You can absolutely start small, maintain it within your funds that you have, and not plan to overextend yourself and borrow money if you're not at that point. If you don't realistically need to borrow for something, there are still ways to healthily build your credit and start building that history. We're going to talk about some of that. Another myth. Closing old accounts helps your score. I hear this very often. Oh, when I was younger, I signed up for all these credit cards. Now that I'm adult, I've closed all these credit cards out. Fact of the matter is, if you are closing out your longest credit account, that can impact your score because credit history does make up a portion of your credit score. I believe it's 15% of your FICO scoring model. We'll see that come through later. And it is one of those realities of we want to make sure we're maintaining those old ones so we have that longer credit history. But again, if we're looking at a lot of things, if you don't need 20 credit cards, I don't know how many credit cards you have, that's a ridiculous number. Yes, look at what you're paying for those fees, if there's annual fees, whatever that may be to maintain those. But otherwise, we want to keep those old accounts open and just healthily maintain them. Final one we're going to do is there's one true score. We're going to get into this later, but the reality is the scores are going to vary by the bureau, by the model, and the purpose. So it depends on what you're applying for. It depends on who you're applying with, and it depends on what they use when determining your credit worthiness. So, if any of these sound familiar, again, you're not alone. There's so much information that gets spread out there. We're here to help make this clear today. And so we're going to do this sort of step by step. We're going to talk about the basics and build it from there, just so you have that vocab to carry us on. And so, credit basics. Credit, borrowed money you agree to repay later. That is just the long and short of it. It is saying that we are putting ourselves accountable to paying back a balance later. You can do this unofficially. Like if I'm borrowing money from Amanda over there, I can say, hey, credit me this money, I'm going to pay you back. But if I'm doing this officially, if Amanda says, I don't want to assume that risk, and we go through these processes, that's where we get into how are we maintaining that I am a person that is worth lending money to? And so once I start maintaining credit activity, right, not just taking on debt, but showing credit activity, I'm going to have a credit report. And this is going to be a record of how well I've handled all that borrowed money. So this is going to look at if I have made my payments on time, it's going to show how much I've borrowed. If I'm showing my credit card, it's going to say how much of that credit card I've used from my limit. They're going to show how long this account has been open. Again, we talk about these things. And so this credit report becomes this huge living document full of our history as it relates to credit that's going to follow us through life. And so we were wanting to maintain a healthy credit report. We're going to talk about this stuff later, but that's what we were referring to. And then a credit score, this is when they look at your report and they use a scoring algorithm to determine credit worthiness based off your report itself. And so, again, we're going to get into all of this, but it's just a number to predict how likely we are to repay a lender on time. The lower the score, the less likely we are. The higher the score, the more likely we are. And I put that in air quotes. It's obviously about personal discipline and the goals you have and what you're achieving. And we're going to get into all of this. But the big thing is, it's not just a number. This credit, again, plays into our daily life in so many different ways. It can impact jobs, housing, insurance, utilities, just emergencies. If you want to get into some of these factors later, it plays a role. So we don't want to just ignore it and say, oh, I'm just saving a lot of money, I don't need to worry about my credit. You don't want to be ignorant to it. You want to just get a hand in it. You can do small things. We're going to talk about this. And let's talk about sort of how they view credit on those reports and who's maintaining this. And so I'm going to turn this over to Amanda now for who's keeping score as we break down some of these bureaus.
So who is keeping score? We're going to talk about the big players in the credit world, the credit bureaus. Most of us are aware, the three major credit reporting agencies are going to be Equifax, Experian, and TransUnion. They are not government agencies. They are private for-profit companies, and they are collecting and managing your credit and the data. Their job is to track how you use your credit, including your payment history, the balances, and the types of accounts you have. And that is how they come up with a score. I'm sorry. Each bureau will create a credit report based on what information specifically they are collecting. These reports often differ slightly because not every lender reports to all three bureaus. So you may see an account listed on one report, but it's not going to be necessarily on the other credit report. It's like having three different versions of your credit story itself. So now I'll let you know that you can check your credit reports for free on annualcreditreport.com. It has been previously known that you could check it once for free annually, but actually currently you can do this weekly. It's a great way to manage your credit, stay on top of things, and have an idea of what is being reported. Now, these bureaus are supposed to be regulated to protect consumers, mainly by the CFPB or the Consumer Financial Protection Bureau. While the CFPB is there to look out for consumers, it is currently under government scrutiny, and its future authority is being debated. So because of that, it really is important that you review your credit reports carefully, pay close attention to what is being reported, as well as the terms and the interest rates that you are being offered. So in addition, just knowing how these reports work, who creates them, and what to look for just gives you a strong foundation of knowledge and understanding why your credit scores may vary. And we will dive into that next, and I'll hand the floor
Yeah.
back over to Will.
Absolutely. Yeah, and with annualcreditreport.com, so that is a government managed site. So it may look a little hokey, but that is the real deal. And it was that you as a consumer have a right to check your credit report once for free from each bureau annually. They did expand this now to where you can do it uh weekly. You can go to this website, you can pull these different things, and that way you can see what the report is. It's not going to show you your score. It's just the report itself. It'll go through some verification steps. And as Amanda said, different lenders report to different bureaus depending on what the different products are. So what you may see in one may not be there in the other. And that's why when we're reviewing these things, we want to make sure that everything is accurate and correct, because uh, it can vary. We just want to make sure we're getting second sets of eyes on that stuff and we're reporting things as we need to. I'm going to talk about that a little bit later, but let's go further into credit scores then. So we said, what's the perfect score? Somebody else asked, why did my score go down 10 points in the registration? There are so many different versions of credit scores out there. So this is from FICO's website. I feel like there's 16 plus when I was looking at all of this, but as it says, versions used in auto lending, versions used in credit card decisioning, mortgage lending. There are so many different versions. I really like the new one is FICO score 10T, which is for the T is for trending data. And so as FICO, which is Fair Isaacs and Company, again, third-party company, not a government agency that is used to maintain all of this stuff and manage it. As time has evolved, they said, okay, now that we know more, now that we have all this data, we can understand more about people and how they use credit. And so they recognize, hey, just because you have medical debt doesn't necessarily mean that you're not likely to pay back uh, that debt itself. And so that shouldn't impact your credit score in the same way. And so there's now special considerations made to medical debt. They also look at, in some of these newer versions like FICO 8, I want to say they look at collections. And if you have paid your collections, even though they may still be showing on your report, it's going to impact your score differently. So there's all these small nuanced ways that keep changing. That T for trending data is looking at your history over the past, I want to say 24 months. So instead of saying, well, let's look at this bigger history, they say, hey, have they maintained not splurging on credit cards for this shorter period of time? It's things like that. That said, no one's really using 10T. Everyone's really using FICO 8 for the most part, but it's going to continue to evolve. And as we said, if you're applying for a mortgage, there's a tri-merge poll, and they're using FICO score 2, FICO score 5, FICO score 4. It's different versions of these different things. So your score is going to keep looking different. And this is just FICO. Let's say there's Vantage score, which is what you commonly see in Credit Karma. And so if someone is using FICO 8 to determine your credit worthiness, and you are looking at your Vantage score, which is a different score, different scoring model, those scores could look differently. And so it's understanding, not putting too much focus into the score itself and the different points, because it's going to keep changing no matter where you're looking at it, what frame of reference it is. We're going to focus on these healthy habits and implementing these habits just in our daily routine life. And that's why we talk about focusing on healthy credit behaviors, not chasing a perfect number. I'll even add, outside of FICO and Vantage Score, more and more places are developing their own sort of credit modeling to determine worthiness. So this is where different cell phone providers might have their own sort of credit check or background check to determine how likely you are to maintain this account in positive standing. Let's talk about where we're looking at these scores in our regular daily life, and it's usually through apps. Credit Karma, I've got listed up there on the top right-hand corner, is one of the most common ones. I think this is an interesting point because some of these apps are going to cost money. I'm going to show you in the next one, but Credit Karma is free. And Credit Karma is great for just generally reviewing your credit. If there's credit activity, I'll get a notification on my phone through the Credit Karma app that says, hey, this just happened. If I had applied for something, if something else was going on with it. And Credit Karma is a free service, and it's free because they are going to sell me so many credit cards and so many personal loans. They have so many partner companies that they are, sending their products my way and say, hey, we are looking at your credit stuff. Here's what could work for you. I would be very wary of these. I would keep an open eye, check out your credit union and what we can do for you in comparison because we are a not-for-profit financial institution. We are here to help our members, the people who bank with us. And so always check that out. But as you're looking at some of these apps, as you're considering, well, why is this free that they do this? That is why, because some of them will sell. These are great for viewing your reports. Also, if you are looking at your report and if there's something inaccurate on your report, you can file a dispute. You say, hey, I don't know what's going on. This is not me. This is not my information. I need this changed. And you can adjust that through the app and you can start that process through their online platforms now. And so it used to be this mail-in document process and submitting everything. Now they have it as a online flow, which is nice. And as it says on the bottom here, apps are helpful tools. There's a lot of helpful tools with this, but real change is going to come from these habits, not just looking at our score. It's going to come from what we are actually doing with it. Amanda, did you have something you wanted to add?
I just would like to add that while some of these might be free and they might be selling you things or trying to offer you other product services, it is a great tool or opportunity at times to at least track your credit.
Mhm.
As Will was saying, not just to keep an eye on what accounts you have or where your score might vary or range because as we already said, it might not be accurate based on what a lender is pulling, but it's a good way to ensure that there are no fraud accounts being opened on your behalf.
Mhm.
It's really that I tell a lot of my members that I work with that it's really good to track that because fraud is on the rise, and then you'll have a heads up or a legs up if somebody does start opening accounts or gets your information.
Absolutely. And should that happen, CFPB is usually a great place to go for resources. They give you a whole walkthrough guide of what to do when someone steals your identity. Because unfortunately, it does happen. So I just wanted to talk about this real fast. These are three of the apps, just as examples of this. So there's Equifax, there's the MyFICO, and Experian. And so even under Equifax, you can see the credit scores provided are based on Vantage Score 3.0, which is not what traditional financial institutions are using when determining your actual credit score. And so this is where I say, we're paying for these scores that aren't even necessarily the proper reflection, and that's 20 bucks a month. I could do some damage with 20 bucks a month towards savings goals, towards paying down extra debt. I could add that into a snowball payment. I could just use that as give me money where I'm not necessarily eating into other parts of my budget and I'm instead saying, okay, this is my sort of fund to just spend as I want. Similar, they've got FICO Premium was 39. They've got Experian, which was 24. They offer a whole lot of features, but like I said, when it comes down to knowing the score, there's a lot of these free tools for review, and the score is really going to come into play once we are applying for things. And this is where I would say, with my FICO, if you wanted to have a better understanding of these things, you can pay into this monthly fee. You could see what your different FICO scores look like across all of these different ranges. If you wanted just a baseline guide, you could go through that, of course, read all the fine print, go through all of those things, but it's one of those you can maintain it, but then it's not like you would need to maintain 40 bucks a month just to keep looking at the score because it should be positive reflecting as we're making healthy habits and healthy choices with this. So I just wanted to show this as an example of what can show up in the real world because credit shows up. As we said, credit checks are common for rental applications, utilities, insurance companies may look at some of this stuff. Something else that's interesting, even though credit checks are run for rental situations, that doesn't mean that it's reported on your actual credit report. It's just run to determine that likelihood. Now, that said, again, these scoring models, these bureaus keep changing. They're recognizing what can we do to track people's real history. And there are methods of tracking your rent as a credit line on your report. There are bureaus who offer services like that. I thought it was just so funny because that would often come up of people saying, I think I'm building credit because I'm paying my rent. And it's unfortunately saying, hey, that wasn't reflecting. Now it's an option. So if you're interested in that, you can definitely try to find some more details. Some employers, so if you are working in a financial institution or if you are in a high enough position, they sometimes run that credit just to make sure that you are someone who can manage money effectively when given funds. And this credit impacts real life access, not just loan approvals. Something I talk about within financial wellness and financial success. It's not about having, all this money in the world, as nice as that would be. I really look at it as what options do I have? What choices can I make? Not what corner am I backed into, is a common way I look at it. 15% link to credit history. Got it right. I always switch it up with that 10% from earlier. So build habits, build credit. So we're going to talk about some of these things across all the different FICO versions. These are still these core components. So 35% pay on time, even the minimum payment helps protect your score. So if you are falling behind on a payment, call the person up and say, hey, I'm in this situation. I want to make a payment. You don't want to just miss that payment altogether. This can start to impact your credit score as quick as 30 days, 60 days, 90 days. You're going to start seeing negative remarks roll in, and that can stay around for a long time. Keeping balances low, this is 30%. Specifically, we're talking about revolving credit. So these are credit cards, money that we can borrow again. So if I have $300, I want to spend 100 or less because that's that 30%. Um, it's that idea of just maintaining that because then the credit bureau will say, okay, this person understands that they don't need to borrow all their credit. They can still maintain their life. If we are borrowing more against that, credit bureau will say, hey, what's going on? How are they managing their own funds? And so that's why this is the second largest portion of your score. Somebody in the registration asked the question of let me read this. What is the top most effective way to raise my credit score fast? And so, Amanda, I don't know about you. I do look at credit cards first because this is such a large portion of it for that 30%. That is something that I can actively pay down in the immediate, start lowering that score. When it comes to things like history, the making payments, it just takes time. Like even if I make a payment, it's just going to show more payments and I need to build that consistent train. It's not just suddenly I made a payment and my score's all better. That 30% is, I think, that biggest piece of it for what you can do in the immediate. Something else I would caution is don't prioritize one thing and then ignore the others because that will work. If you're like, oh, okay, I'm going to use all of my money to pay down my credit card debt. And so then you don't make a minimum payment, then we're going to talk about this in a bit, but negative remarks like missing payments can stay on your credit report for 7 years. And so that's going to work in the opposite of the way we want. So make sure you're doing at least the minimums on these things and then actively paying down those credit cards. That credit limit is usually where we're going to find some opportunities for immediate growth or expanding your credit limit is also a way to go. And that 10% credit mix, again, this is a low portion of this, but having credit diversity. So it's saying, okay, I've got an auto loan, I've got a credit card, I know how to maintain different types of credit, and the bureau is going to reward me with that with a better score. So these are usually these components as it goes into this. I'm going to turn this back over to Amanda because she's got a hand in this with the consumer piece. Um, and we are coming up on that time. So if you do need to leave, completely understandable. We're going to carry on. You will receive a recording of this. We have a few more slides, and we're going to get into some CAFCU business. But Amanda, I'm going to turn it over to you.
So talking a little bit about debt consolidation. So what debt consolidation does for you is we can combine multiple debts into one loan or one payment. The big benefit with this is maybe paying down or paying off your existing credit card balances, keeping those credit lines open so that you're not getting that negative remark of closing an account, especially an older established account, but giving you now the benefit of opening up that credit line as well, which will impact your or increase your credit score potentially.
Mhm.
But you're overall generally going to be making having a lesser interest rate, potentially lowering your payment. Not always. Sometimes it's an equivalent payment. Sometimes your payment might increase, but you do have to consider that again, you're paying a lesser interest. Typically, debt consolidation loans, you can pay maybe about half of the interest rate or overall interest that you would be paying on the credit cards themselves.
Yeah, some of those high retail credit cards come in at like, I swear it's getting crazier, but it's like 25 to 35%. It gets,
30,
it's
30 to 35.
absurd. Yeah, it's
That's
30 to
it.
35 when it gets to some of these like retail chains. And so if you are consolidating from a 30 to a 10% debt consolidation, like there's just so much interest within that to be saved. Sorry, Amanda.
No, no, you're exactly right. And that's really what can help you, especially if you are falling behind, you are struggling. Those minimum payments are mostly going to be going towards interest at that point. So if you're struggling to make a larger payment or pay down those balances, looking at debt consolidation options are always a great tool and opportunity if you can do that. With these, like I said, it is a tool. So it's not going to quickly fix your situation necessarily if you are struggling, but overall, it's going to give you a better repayment option. It's really just, it's not erasing or wiping out your debt. You're really just reconfiguring it, you're restructuring it to make it probably more affordable. And overall, at the end of the day or at the end of the term, you will be bettering your financial portfolio and your credit as well.
Yes. Yeah, really. I mean, with any of these things, like it's always going to be, you are in such a unique situation. We are here in a general webinar speaking to you all. Um, you are going to know what's going on with you best. And this is where, again, talking to people like Becky, saying, hey, if I want to figure out what works for me, this is where setting up those money compass sessions can be so helpful. But debt consolidation can absolutely be a great tool. If you're interested in, again, if it's like, well, I'm under all of this stress and I know that I need to consolidate my debt, but I don't have a lot within my financial plan right now. Again, there's budgeting resources. That's usually where I recommend is just getting an eye on what's going on with your finances. And we talk about how to build savings and how to build debt payments into your budget. And so that's all within there under the resource tab. But we are going to keep moving. So somewhere else that credit shows up is what's the deal with the mailing credit card offers? Maybe it's because I'm looking up all of these financial wellness topics. I get so many mailing credit card offers and so many things in general. And so I just wanted to talk about this real fast. So these are pre-screened offers. So they're not guaranteed approval. So it's just generally saying, oh, you might get this. And within this, if it's not something you're interested in, instead of throwing it away, I would recommend that you shred it. This is where a lot of them are going to go, hopefully, because there is still your personal information on this credit card pre-screened offer. And again, as Amanda said, fraud is on the rise. Sometimes people are able to take that offer, fill it in with their own stuff. They can try to apply for credit using your information if they've been able to gather a few different items. And so that's why shredding these things is really great. And again, there can be some great options in there. It really is just going to depend on what you're looking for. I am always going to go for simplicity versus those promotionals, those rewards, because I'm not spending my money to earn those rewards and to earn those points. And so I'm looking for low credit score that I can just easily have those auto payments made on time or low credit rate on that credit card, excuse me, not score. If you don't want to be receiving these pre-screened offers, they do have optoutprescreen.com. This, I believe, is only for a limited amount of time. You can also pay for additional things to opt out, but if you are sharing your information into the world, then there's a good chance it's going to be sold to somebody else, and you are then going to be receiving offers like this. I know even within my own cell phone provider, I was going through my settings and I accidentally found something that was like, share my personal detail with third-party vendors. And I was like, well, let me uncheck that real fast. So go through stuff, make sure you know where everything is, but you can say, hey, I don't want to receive these. Opt-out pre-screen, totally an option. What stays and what goes. So this is where we talked about some of these negative remarks and how long they can stay on your report. So positive accounts that are just open. So let's say a credit card that you are just continually making those payments. It's in good standing. It's just going to stay on your credit report for as long as it's in that good standing. It's not like, well, it's been on there for 10 years. It's off now. As long as it's open, it will still be there. And so that can be a great way to maintain that credit history. But let's say you had a loan, made all your payments, everything looked great, account closed off. So it will still show on your credit report for those next 10 years because it will show positive history on your credit report for that. Now, let's talk about some of these negative things that show up. So, collections, charge-offs can also stay for 7 years. So this is where we talked about if something was in collections, if you had that debt, the negative remark will stay on your credit report. But if you are making that, if you made those payments and the debt is cleared, even though it still is on your credit report, it will more favorably impact your score to have paid that debt off through those means. If you have never missed a payment and you suddenly miss a payment, that can be a big hit on your credit score. Over the next 7 years of this missed payment remark on your credit score and report, over those next 7 years, that will impact your score less and less and less. So it's not like it hurts the same as it did on day one as it does on this last day of the 7 years. It will lessen. And with this, I also want to mention that uh, hard inquiries also fall off your report. I believe hard inquiries are after 4 years or 5 years that they fall off the report. Amanda, correct me if I'm wrong on that.
I think it's more like 2 years.
2 years. Some of those, maybe that's changed too, because that was a little bit longer back when. But again, these things evolve. And so it definitely, is helpful to stay up with it for things like this. 7 to 10 years, negative remarks. Oh, I was going to say, so let's say you missed a payment, never missed it before, huge impact on your score. Let's say you're unfortunately missing a lot of payments. Something has happened in your life. I'm not here to judge you. I don't know your circumstances. You've missed a lot of payments. The more payments you miss, again, those are going to remain on your credit report for those 7 years, but it's not like that first payment is going to hurt and then the seventh missed payment is going to hurt just as much. That will have less of an impact. The credit bureaus recognize something is going on with this. We don't need to hurt them repeatedly in this manner. They just are monitoring it and tracking it as it goes along. So when we talk about doing things fast, what's the fastest way to improve my score? We talk about those credit limits, but really some of these things we're just waiting for the remarks to go away. We're waiting for the positives to remain and just maintaining those healthy aspects of our credit because time is our best friend when it comes to this stuff. It just takes time for that score to build that history, to build that payment record. And so 10 years, 7 years, really make sure you're maintaining those minimum aspects. Final slide about credit, just to hit these points again. Doesn't have to be confusing. We just want it to be consistent. So you don't need to try to reinvent how you're using credit every month. Make sure you've got the funds within your budget for how you're paying off your credit cards. So you're not accruing more interest there. And just make sure you have an easy setup way to make those payments. Just keeping it consistent, maintaining is going to take you so far when it comes to your credit. Focusing on those habits, again, not chasing the perfect score. Scores can change for so many different reasons. Focus instead on the habits, and you will see your score positively reflect that as well. And within all of these things, use your report as a tool, not a judgment. I always say it's just where we're starting off from. Whatever happened to you before this point, you're here today. We're trying to move forward into a better future. You say, okay, this happened, acknowledge it, learn from it, and then apply that into this next chapter. And we're here to give you as many tools, as much information as we can to help. Speaking of which, let's get into some CAFQ stuff. We have, for those of you who aren't members, we do have a new member discount for, we are taking 0.25% off qualifying APR on all vehicle loans, signature loans, fixed rate home equity loans. I put that little asterisk there because you usually can't combine this with other offers. So I just want to be clear about that. But within the first 60 days, if you're a new member, signature loans can be used for that debt consolidation we just talked about. So you can automatically take another 0.25% of whatever you're approved for within this new member 60-day period. We also have a share certificate promotion going on right now. So if you bring in $500 from an external account from outside CAFCU, then you can open a 7-month share certificate at a 4.25% interest rate. This is a very great competitive rate going on right now. This is happening for a limited time. So if this is something you're interested in, definitely something to look into. You can call into the member center or visit a branch to usually set those up. We are also celebrating our 86th anniversary. June 3rd, 1939, I believe was the actual anniversary date. And so we started this the Monday before, but we are taking 0.86% off of whatever you are approved for within all of these different things. Again, limited time. If this is something you're interested in, definitely take advantage of this. We are also offering no payments for 90 days, very flexible terms. So if you are in the market for a car, great time to take advantage of this.
It also qualifies, or also qualified for that is if you want to refinance your car, potentially get a lower rate.
Yes.
We can also do cash out refinances. So if you have a vehicle with equity in it, if it's has a loan or if it's paid off, we can always look at doing money against the title to a vehicle to consolidate, or if you need funds for another something else going on. That's always
Yeah.
options as well, and usually at a much lower rate than even an unsecured option.
Absolutely. There's so many different ways to work this stuff, and we're here to help. If you want to talk with Amanda about this stuff, I'm sure she's happy to help. You can submit questions in the survey. We'll have a Q&A at the end here for those who are still here, and we'll just yeah, we're going to be around. But if you do want to look into some of these things, you can also talk to Becky about it. I keep bringing it up. Money Compass. These are free. These are unlimited. These are secure. It's your time to talk finances. It's really no pressure. You can be a video call. It can be a phone call. And I've built budgets on these sessions. I've compared financial institutions or products. I've just talked through credit. It can really depend within these sessions, but we have a great team of people, super excited to help you. Definitely recommend taking advantage of that because it's free and it's unlimited, and you just don't see that. So, Money Compass, there's a resource for that as well within the resource tab. Next month, we're going to be talking about handling financial hurdles. Um, Things just come up in life. This whole series is called It's a Financial Life. Hurdles come up, emergencies happen. We're going to break down this session. If you're interested, if you like this session, want to attend something similar about this, feel free to sign up and register. In the Q&A, in the chat, if there are things that you are interested in within this topic and learning about, let us know because I can absolutely include that as we cover all of this information. And now we're into the Q&A. Thank you so much, everybody. Definitely went a little over. I always have so much great information to share, but we are now going to field some questions. Amanda, thank you so much. Amanda, do you have any things you wanted to add here at the close of this?
Um, I I don't know. Just here to help out with any questions.
Um, Fantastic. Well, let's get into some of these questions. Which FICO score model does CAFCU use? Is my FICO a part of TransUnion? So my FICO is a separate entity. So that is FICO's app that they have created. So there's Equifax, Experian, TransUnion, all separate companies. Fair Isaacson Company, separate company. Vantage Score, separate company. These are all different places. Um, in terms of which FICO score do we use, again, it depends on what you're applying for. So as you saw within the lending, there are regulations involved with this as well that are set. So how we're determining these things. So that's where you saw there's different versions for lending. I believe with auto we use TransUnion for the most part, Amanda.
All of our consumer loans, so an auto loan, a signature loan that we would use it also for debt consolidation, credit cards, a personal line of credit, those would all be TransUnion, and we do the FICO 8.
Yes. And so great example of TransUnion FICO 8, not Experian FICO 9, right? Just to say we are the same as other people. We're reporting to different things. And again, if you are, it's just about maintaining those habits and you will see these positive things reflecting your score. Um, yes. Yeah, annual credit report. They said sometimes they will give you a score, but sometimes you have to pay for it. That's where I don't even worry about the score. As I said, I just look at that report and I'm looking for information that is accurate or inaccurate and disputing what is inaccurate. If there's information that is on your report that is accurate that you just don't want to be there, I'm so sorry because we want this to reflect honestly. And again, having those negative remarks gives you this opportunity to show growth and that you can grow and maintain. When people start, this is a very common scam or tactic by credit repair companies is that they will flood the bureaus with false reports or saying that's not accurate, that's not accurate. And it's a criminal offense on one level. Some people have been like charged with also filing fake police reports because that usually goes hand in hand if it's like fraud, saying, okay, well, here's the police report where I identified it as fraud. So they look at all this stuff. You just want it to be honest. And if there's inaccuracies, as I said, you can go through those online platforms to dispute, but otherwise, they will fall off eventually, and just maintaining those habits will take you far. Um, Okay, I'm not seeing other questions right
There were
now.
questions in the Q&A.
Oh, checking over here. Thank you, Amanda.
Cherish asked if I have missed missed payment 3 months, how can I fix that?
So for 3 months, that is where, as I said, there's 30 days, 60 days, 90 days for missed payments. Those are the remarks that you'll usually see on a credit report. So that 3 months is that 90 days. All we can do is get back on track with those minimum payments. And again, at least the minimum. And then those are going to, you'll see that start to positively reflect. Those negative remarks will fall off, as we said. And then it's also just maintaining other parts of our credit healthily. Sometimes when credit bureau or when lenders are looking over these things, or maybe different agents for like rentals, whatever it may be, sometimes it's not just a cut and dry score. Sometimes they're looking at the report and they're saying, hey, everyone has a struggle at one point or another. Am I seeing enough positive remarks? What is specifically showing up on here that would make me question this? Because if it's somebody just doesn't have a lot of history, or if it's someone who missed 3 months of payments, but then got back on track and was good for a year, it's those sort of things. Those negative remarks may still be on your credit report, but sometimes you can explain that, and all we can do is just move forward with more or healthier actions towards maintaining credit. It also said, does CAFCU offer debt consolidation? Yes, we do offer debt consolidation. We can do this through balance transfers within credit cards. We can do this through using collateral like our auto lending, like Amanda just talked about. We can do this through signature loans. Again, depends on what the situation is, what's available to you, what those options are. That's where speaking with somebody at CAFCU can be super beneficial. I don't have access to accounts, so I couldn't tell you personally, but uh, absolutely, this is the stuff we walk through and look through with all of our members when we're going through these processes, I would say. So yes, if you're interested in that, we can absolutely um, go through there. Yes, we can absolutely offer debt. And so someone asked that we will give loans on the equity of a vehicle. Amanda, I'm going to let you answer that one a little more specifically. And what exactly is a signature loan? So a signature loan is also viewed as an unsecured loan, is another phrase you might see for it. A signature loan is literally where it's just your signature. There's no collateral like an automobile, which is saying, okay, well, at least there's value that the lender can collect on should you miss payments, go into foreclosure, whatever happens with life, that they can still say, okay, we can recoup this through the vehicle itself because they hold the title, similar with real estate. With these other debts, since we're consolidating it, we're just saying we're going to pay it back. And so that is why we are traditionally charged higher interest rates with those signature loans, because it isn't secured by a physical asset. Amanda, does that sound correct?
Absolutely.
Oh, fantastic. All right. But yes, for the equity on the autos, if you could speak to that again real fast.
So we will offer it. We can do it. Sometimes there's enough equity in a vehicle in an auto loan that you might have a loan against currently. Sometimes if you have a vehicle that you own free and clear, then that gives us even more equity to play around with. It's just it depends on what the situation is, what the value of the vehicle is, and the age of it. But it is always, if you have the equity in a vehicle, it's always a great opportunity to pay a lesser interest rate because, as Will was just saying, it's secured, so we are able to offer a generally lower rate on that than a loan that you are just signing saying, I will definitely be paying this back.
Um, and when it comes into these things, I also always recommend those biweekly payments, setting up auto payments. So when you're paying down a signature loan, when you're paying down an auto loan, you end up making extra payments. You pay principal down faster. And it's just so beneficial, and you never have to think about it because it's just going automatically for you.
It's also a good way, speaking back to missing payments,
Hmm.
if you have a lot of accounts and an excess amount of accounts and it becomes too much to manage making your payments regularly, it is a good option. If you can set up some kind of automatic payment to any of your accounts, then you never have to worry about missing a payment. You want to
Yeah.
track that the payments are still being sent over, they're still being applied properly, but you don't have to have that mental reminder to go in and make those payments regularly. And here at CAFQ, we have many options to make automatic payments against loans, in addition to manually making larger payments or additional payments
Yeah.
to get those paid down on. Nowadays, most regular consumer loans are simple interest loans where they usually don't have a prepayment penalty or anything of the sort. So you are typically encouraged to pay them down if possible. So you are paying less money overall.
And I keep bringing it up. This is stuff we talk about within that budgeting webinar and in that template. Um, so I feel like with many people too, it's that they may not have a budget yet, and so they're not fully aware of how that money moves in and out of their life. And so sometimes when they create that budget and they put those numbers to it, they realize they had more available and they can pay down that debt faster, use that snowball debt repayment, which we talk about in Defeating Debt webinar, which that recording's on cafq.org/webinars as well. We're creating this whole library of resources for you all. Yes, 4.25 for 7 months compound interest. Somebody asked in the Q&A for the share certificate that we have going on right now. If that's compound interest, yes, it is. And so you're going to see that compound over that 7-month period. Yeah, daily posted on terms, I believe. And we can get into the fine details of that with a branch manager, somebody at the branch to help set that up, or feel free to call into the member center, 1-800-359-1939, just like the year we were created. And you can find that all of this on cafq.org/contact us or contact. And you can see all the different ways to get in touch with us. But yes, 4.25 is a very competitive rate. Absolutely. I mean, and again, with all of these things, I'm such a big believer in our products and our services. I would encourage you all just to check out your options. I just know that what we offer is so simple, so straightforward, and with really competitive, great rates and just a very easy daily money management system, which is like everything for me. So I can talk about more about that later. But for today, it doesn't look like we have any other questions. I just want to say thank you so much to everyone who stuck around. Thank you, Amanda, for joining in today and sharing your insights. It's so huge and so greatly appreciated. And yeah, hopefully we will see you in next month's webinar, Handling Financial Hurdles. And like we said at the beginning, let us know if there's anything in the survey that we can do better or what you're interested in. Get one of those Money Compass sessions with Becky. They're free and she's so much fun. I guarantee. So, and Becky just did put that link in the chat as well. It's also available in the resources. We're making everything as easy as possible for you guys to access. So, thank you, everybody. I hope you have a great rest of your week, and hopefully we'll see you next month. All right. Bye, everyone.